Hi, I'm Brien Lundin, editor of Gold Newsletter, and I am here at the Metals Investor Forum in Vancouver. And I have the great pleasure to talk right now with John Florek, President and CEO of Emperor Metals. And John, Emperor is kind of coming onto the scene here, and the key thing that I see being in this industry for a long time, I've seen a lot of discoveries, but I've seen some of the bigger wins in this market have come not so much from discovery, but rediscovery, where another team comes in and reinterprets what somebody else has done, or for some reason a project really wasn't fulfilled. And you're doing that right now and about to do that right now. You have acquired a project that has 700 some odd thousand ounces of initial historic resource at over 5 grams per ton. That looks good. But the reason why you got the project is because you employed artificial intelligence and you saw the potential before you acquired the project. Please tell us that story of rediscovery a bit.
Yeah, absolutely. Well, we were looking for projects for this company.
Yeah.
And we came across this property that Globex had, and it was in a tier 1 mining district, and it was right along the Porcupine-Dester Fault.
Yeah.
Which is one of the major breaks in the earth crust, the plumbing system that delivered all these high-grade gold deposits in the region. And this deposit had numerous workers that explored it, like 5 or 6 different companies.
Mm-hmm.
And it was somewhat obscure when you went through the historical reports because there was no 3D model on this deposit.
Yeah.
So some of the work that I've been doing, I've been building some models with other teams prior to joining Emperor.
Yeah.
And so I took this data, I massaged it so I can put it into machine learning,
Mm-hmm.
which is based on artificial intelligence, MapTech's
Yeah.
machine learning. And so when I put it through the algorithms, it came out with a model that really illuminated the opportunities for exploration on this deposit.
Yeah, and I think that's important. I look at some of the materials from the company, and I've been in this business for an awful long time, and I look with skepticism when companies show a block model and they show arrows going in all these other directions saying open, 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 which you do. But it's important to know what's behind that these are established trends. These are extensions of plunges that have been illuminated by the artificial intelligence, by 3D block model. These are natural places to look for resource extensions, and in fact, it's really just stepping out, right?
Yeah, exactly. We're not reinventing the wheel. I mean, you look right along the same trend. People are having success exploring along these plunge lines.
Yeah.
So we're not reinventing the wheel. This is something that's legit. It's showing that the deposit can be extended along
Mm-hmm.
plunge lines, down dip, and along strike. So plenty of opportunity to grow. So it's exciting. It's very exciting for us to be able to walk into a tier 1 mining district and acquire this deposit. But more importantly, there's like an emergent story here. We're at the eastern end of the Porcupine-Dester Fault,
Mm-hmm.
and there's basically 20 million undeveloped ounces in that region. Moneta Gold published a 43-101 report of 12 plus million ounces, first mining 5 plus million ounces. This was in 2022. And including this deposit, we're looking at 20 million undeveloped ounces. In the middle of that, they have the Holloway mining complex,
Mm-hmm.
owned by Agnico Eagle. So when we look at this deposit, we feel as though we can grow it. But more importantly, it's probably a high-grade satellite deposit which we can feed to a lot of the existing mills in the area, because it is a tier 1. You have companies like Agnico Eagle and Newmont. So we want to grow it, and we think that this is a huge opportunity for the company.
So do you think that there's M&A opportunity then in the area that you create, or I would think starting with over 700,000 ounces of very nice grade, having clear expansion opportunities, that you're looking to build a significant resource fairly quickly? Are you looking at the potential then of an M&A type of an event that would reward shareholders, or could reward shareholders very quickly?
I think that
relatively quickly.
Yeah, I think this is an emergent story. I think that it's not really recognized at the moment, but there's a lot of major mining companies that are looking to build on their inventory. And I think you're in a tier 1 district And we have, along the Porcupine Duster Fault, it's been proven to be successful for a lot of different companies.
And
So I think this is definitely a M&A in the future.
so from one standpoint, it's previous operators perhaps did not have the 3D model. They didn't particularly understand the potential. But from another standpoint, they kind of missed a cycle. Good deposits can miss a cycle, and all of a sudden the money dries up and you can't do anything with it. And somebody else comes in to pick up the pieces. One of the more famous stories out there in recent years of and God knows I don't want to saddle you with this, but was Great Bear. It's very, they came in and reinterpreted the previous work and saw what other people had missed and found a whole lot more. Not to say that you're going to achieve what they achieved, but at 700 ounces, 720,000 ounces, you don't have a whole lot more to get over that 1,000,000 ounce, very good grade in a very good district benchmark that starts to attract attention from big companies. Importantly, this is not something where you're going to sit on it and do a lot of groundwork, et cetera, which of course is always necessary. But you're going to be drilling pretty soon.
Yeah, the planned Q2, we're going to be 10,000 meters of drilling. And what is the best place to explore for gold? I mean, we're
next to a head frame.
Well, we are on the margins of a high-grade gold deposit, and it's in a district that is very, very productive. And the in-ground value of this deposit right now is $2 billion at today's gold prices. And just to put into context, since it's so high grade, it's very sensitive to the gold price. In 2011 till current, no work has been done on this property, and it grew by $500 million.
Right. Good point. Yeah.
So we are at the margins of a high grade, and that's a great place to look for extensions. It reduces the exploration risk. So you could be way out in a different district that's unknown, but we're in a proven district.
That's a good point, because I tell people that when you're at the beginnings of a secular gold bull market, one that's based on powerful fundamentals, it's going to last a few years, which is where we are right now. What you want at the beginning of that kind of a market are companies with identified resources, because if they did nothing else, the value of that resource grows as the gold price goes up. But also it attracts attention from investors, because value investors can see that value, and it's generally at the beginning of a trend underappreciated by the market. So as that trend appreciates or it continues, people come to find and they focus on those companies that have those proven assets. So this asset is proven. You're going to employ 10,000 meters of drilling very soon on very, high confidence extensions to the resource. So there's a very good chance you're going to be delivering very good drill results to a receptive market in the months just ahead.
Yes, that's the plan, definitely.
And your market cap right now is pretty small.
Oh yeah, so that's a good point. Right now we have a 48 million shares outstanding.
Yeah.
Fully diluted, we're at 56, and we have $3 million in the bank currently. But this model is based on about over 100,000 meters of drilling. Mm-hmm. So in current terms, that's about $20 to $30 million worth of drilling.
Right.
And we only have 48 million shares outstanding. How much dilution would a company create by drilling 30 million? So the historical work is kind of key to giving us that leverage to capitalize for shareholders.
Yeah, it would have taken years and an awful lot of money to delineate over 700,000 ounces of resource. The next 300,000 to 400,000 will not take that much, because you know where to look.
Yes.
And you're going after it in the weeks just ahead.
Yeah, and this company is built on AI. I mean, it's a new company.
Yeah.
And the first set of data in the models are all generated with this new technology. And like I mentioned previously to people, is that this model was built in 4 to 5 weeks, and conventional modeling would take like 4 to 5 years to build this stuff. So we could build multiple models while we're drilling and see which ones confirm. Mm-hmm. And then we could basically take
Take
those models
advantage of
and redevelop new models from that.
Mm-hmm.
And so continuously update models that would take years to develop. We can do it overnight.
So not a lot of wasted drilling. You're going to be drilling where the gold is, or very likely should be.
Yeah, extensions of gold. We want to build the inferred resource. We want to, build the quality of the deposit as well, and we want to get, this into the collective consciousness of investors that this is a really high grade gold deposit right along a prolific break in the Abitibi.
Well, John, thank you so much for being with us. We're out of time.
Okay.
Key points that I see here are you're in early stage companies, drill hole plays for the upside potential. You've got that now, but it's also a value play in that the value of what the company already has far exceeds its market cap. So really all the exploration essentially could be considered for free at this point until the word gets out. So look at Emperor Metals right now. Thank you so much, John.
Well, thank you, Brien.
Thanks.